Morning, Steve Free in Chicago with the morning grain comments. Well, markets and grains are a little bit higher overnight. Today, everybody's calling it CPI Wednesday when we get the updated inflation numbers. Some people think that if inflation is down, that the Fed may become less hawkish and that could help the equity markets. So we'll see what they have to say. China announced that their military drills is now over around Taiwan, but they will continue to have certain practices that they had normally before the drills and before U.S. House Speaker visited Taiwan. 6 to 10 day weather, interesting in that it looks like normal rains across some of the Midwest with above normal temps in the Western Corn Belt. The 8 to 14 day has below normal rains in the Western Corn Belt, but temperatures, especially the eastern half of the U.S., could be below normal. And asking our weather guy, he said that if tropical depressions move into the U.S., especially the Atlantic coast, it could provide a colder and maybe wetter winter, especially in the Northeast. So we kind of have to watch that pretty closely, but I don't think he's talking about any early frost. U.S. cash crush margins are still high. It feels like some of the crushers are having trouble buying beans, so that might be the catalyst for the higher soybean nearby prices. Also, meal values from the crushers are higher, and that also might be helping the meal. I think that we'll be watching Europe. They continue to import corn from Ukraine, and their numbers suggest that they may need to import more corn, and they have adjusted some of their import qualities to allow for the Europe to buy U.S. corn. Brazil corn futures are higher and near 7-week highs. The Matif corn and wheat futures are also higher due to the European dryness. Just a kind of a reminder as we go into the USDA report on Friday, the high-end September beans this year was 1604, the low was 1304. Now we're trading around the 1531 area. Meal has gone pretty much straight up from the lows of 388 to 458. Soybean oil dropped from its high of 80 cents a pound to 55, and now back close to 67 cents a pound. Corn dropped from a high of 778 down to 561, and we're now around the 626 area, and 670 would be a 50% retracement, and 635 has always been key resistance that we need to trade over to turn the charts higher. Wheat has had a steep drop from a high of 1285 down to a low of 752. That's a $5 drop in wheat prices, and I think that wheat might be a little oversold at this point. So again, it's a time of year in which we trade weather maps. We trade USDA numbers. We'll be watching inflation numbers out of the U.S. and impact it might have on the dollar. The higher dollar has slowed some export grain demand out of the United States. We'll also be watching what goes on in Ukraine and watching for China demand, whether it's energy, whether it's soybeans, or whether it's corn. As always, these are my thoughts and not those of ADM.